There are thousands of indicators to choose out there when you're trading, but which ones are the right ones for you, or which ones are the right ones for that particular market environment? Our guest today is Dr. Alexander Elder. He's here to talk about that. So Dr. Elder, what type of indicator should I try? Now, you've got some. Maybe you could talk us in through and show us how we can use, or pick one that will work for us.
Well, if you open any good software package, you will get literally hundreds of indicators. I believe TradeStation has 250 of them. Other packages may have more or less. But the point is, you don't need that huge mass of indicators to analyze prices. When you look at a day's bar, at a day's price action, you have 5 numbers: open, high, low, close, and volume. And if you do futures, add open interest. You don't need 20 indicators to analyze 5 pieces of data. I'm a great believer in something I call 5 bullets to a clip. An old army rifle took 5 bullets. 5 indicators is enough for a trader. If you're desperate, you can use 6. 7, you have a problem.
Now, you've got some of your own indicators. Which would you say is the most popular?
I use 4 indicators: moving averages, envelopes, MACD, and the force index, which I invented and described in my book. But to me, the key thing is not the indicators themselves. The key thing is how you layer those indicators in time. Markets exist at the same time in multiple time frames. They're moving on monthly, weekly, daily charts, hourly charts, 5-minute charts, and they're very often moving in opposite directions. My approach to trading is this: you decide what is your favorite time frame. Do you like daily charts? Well, if you like daily charts, you're prohibited from looking at them. You cannot look at those charts until you have gone one order of magnitude up. You've gone to the weekly chart and made a strategic decision on the weekly. Then, and only then, can you come back to the daily chart, open it, and now you can use these indicators to decide where can you trade in the direction that the weekly chart has given you. So if the weekly has said be a bull, you're only looking for buys. If the weekly said be a bear, you're only looking for sells. But that's really the filtering through time, using the bigger time frame for a strategic decision, your favorite time frame only for the tactical.
So why not trade the direction of the market is for that day, even though the longer term trend might be up or down? I mean, what's the benefit of that?
Markets don't move in a straight line, and even if you're trading for one day, let's say you're looking at a 5-minute chart, that chart is going to have multiple waves in it. And that's why I think you should, if you want to trade during the day, go to the 25-minute chart first and decide which way is the market moving today. Then drop down to the 5-minute chart and only pick your entry and exit points.
Dr. Elder, thanks for your time.
Thank you.
You're watching the MoneyShow.com video network.